Actually, this program has been launched in the Vizag at the 24th, this 25th Regional PCS National PCS Conference. This kind of program under the leadership of dynamic leadership of our president and under the chairmanship of Corporate Law and Governance Committee, Dhananjay Shuklaji, who is a very dynamic leader and who is a very knowledgeable person, has initiated this new initiative to make that all our members gain knowledge on practical aspects on the contemporary subjects. So with these few friends, we have today having the second program. Every Wednesday, we are planning to have this program for all the members throughout Pan India. Anyone can participate in this program through webinar. One unstructured credit hour is given. Apart from that, the knowledge which is imparted, which is passed on from these legendary speakers like J. Sridhar sir, who is having more than 43 years of experience in the profession and dual qualified. He is alumni of IIM Institute, which is a very, very noble institute in India. And this kind of program is really helping all the members, especially this program has been planned and the topics have been chosen on timely basis, because this is the time where your annual reports are getting prepared, especially for the practicing company secretaries and company secretaries of unlisted and private companies, where you need to report in your director's report about the CSR activities in a full-fledged manner. So we thought this will be a right occasion to have this kind of subject and to have insights into intricacies of the compliance requirement and reporting requirement of the CSR. I would like to, friends, give a brief introduction about J. Sridhar sir, who doesn't require any introduction, but it's formally I need to give this introduction. J. Sridhar sir is a graduate of Commerce from Madras University and graduate of Law from Bombay Universities, both prestigious organizations, and he's a fellow member of Institute of Chartered Accountants of India and also our own institute, ICSI. He is a degree holder of Business Management and Masters in Management Sciences from Symbiosis Institute of Business Management, Pune University. He is alumni of Indian Institute of Management from Ahmedabad, friends, and he is a senior executive development in the senior executive development program. He has having 46 years of experience in the areas of finance, taxation, secretarial and legal functions, including 44 years in Bajaj Group itself. Presently, he is Vice President and Company Secretary of Bajaj Auto Limited since 2001. Sir, I hope I know it will take long time to read entire your profile. It is so long. If you permit me, I will restrict to this much. Thank you very much, sir. And friends, this EEE program was successful, I can say, because 6,000 plus members have participated last Wednesday. I think after a RRR movie, this EEE program is the most successful, most popular in India now. Friends, with this brief introduction, sir, now I know its floor is for you. I request you to please go ahead with your presentation. And friends, I request all of you to keep your questions, post your questions in the chat box so we can take up. Sir, if you permit, we can take up questions in between your this thing presentation, or we need to wait till the last, sir. I need your confirmation on that.
Maybe I'll give a background for about maybe 45 minutes to an hour. And based on that, I think we can have more discussions and
Thank you very much, sir. Then, friends, please keep posting your questions. All the questions we will take up at the end after the main presentation completed by sir. Sir, the floor is open for you, sir. I also, eagerly waiting to have and listen your experiences and gain knowledge on this subject.
Thank you, sir. Thank you very much. Thank you very much for the kind introduction, Mr. Venkatamana. And then, because it's my proud privilege to be part of this webinar, and I'm very happy to be amongst all our members. And again, I think it's a great initiative taken by the institute and our president Manish for having organized such webinars. I'm sure it will be found useful by all our members, and I'll be happy to provide, share some of my experiences, and of course, gain from experiences of all the participants here. So, with this brief background, I think I'll just start sharing my presentation.
Our president is always, after us to have more programs for knowledging, giving knowledge to members.
Correct. I think it's really wonderful of him. And is my screen visible?
Yes, sir. Screen is visible.
Okay. Fine. So what I intend doing is that I'll cover some of the critical aspects of section 135, which is the basic section with regard to CSR. And then we will, of course, touch upon Schedule 7, the various activities covered under Schedule 7. And then I think we will take up these companies' CSR policy rules of 2014 and as amended in 2021, which was a major amendment. And of course, there have been some minor amendments subsequently, but that I think will be the major thing which I would like to touch upon. And then I'll also maybe touch upon some of the aspects of annual report for CSR, and then a little bit on the annual action plan, etc. And then some of the circulars and notifications which are extremely important for our profession and for the CSR profession, and basically the FAQs of MCA of 25th August 21. I think that also I'll touch upon. So this will be, and then after we have, have the background of all these provisions, then I think we can take up some critical aspects, and then we can take up the question and answer session, and then maybe we can leave about 45 minutes for that. So with this, I think I'll start with section 135. Next, yeah. And I think most of you, I think, are fully aware of all the provisions. I think these provisions have been there for quite some time now. And of course, numerous amendments also have come about since 2014. But by and large, I think most of our members are thorough with all the provisions here. But to set the tone, I thought I'll just briefly go through some of the critical aspects or the basic and fundamental aspects of CSR under the Companies Act and rules, etc. So basically, the applicability is the most crucial aspects for CSR, and which companies get covered under CSR. So that is the basic beginning of that particular section 135, where it says that if the net worth is 500 crores or more, turnover is 1,000 crores or more, or net profit is 5 crore or more during the immediately preceding financial year. That is an important aspect we have to consider. So it is not that it is in one of the 3 years or average, etc. It is to find out about the threshold, you have to look at the immediately preceding financial year. And if the company gets covered under any of these thresholds, then it has to constitute a CSR committee of the board. So that is the first aspect which has to be done by the company. That is the first obligation for the company. And once, and then how the CSR committee should be constituted is also mentioned. So that it should be consisting of 3 or more directors, out of which at least one shall be an independent director. So this is what is very important to note. And where of course, there are companies which are not required to appoint an independent director. And then in that case, the CSR committee may have just 2 or more directors. And so naturally, the condition regarding independent director would not apply. And the director's report, the board report every year, shall also disclose the composition of the CSR committee. So that is the first point to be noted. And then now let us see what are the obligations of the CSR committee. Once a company is getting covered, and then once a CSR committee is formed, then what are the obligations of the CSR committee? So the first is, of course, it has to formulate and recommend to the board a CSR policy. And that CSR policy, of course, what it should contain, etc., we'll get into a little later. And it shall indicate the activities which are to be undertaken by the company, and in the areas or the subjects specified in Schedule 7. So that is the first obligation of CSR committee. And then it should also recommend the amount of expenditure to be incurred on CSR activities. And thirdly, it has to monitor the CSR policy of the company from time to time. So all these 3 things, you will note that it is basically with regard to the policy, the amount to be spent, and then monitoring the policy. Now let us look into the obligations of the board. And whatever recommendations are received from the CSR committee, the board will have to consider them, and then it has to approve the CSR policy, and it has to disclose the contents of the policy in its report. And it has to place it on the company's website. And of course, there are some provisions with regard to the manner in which it has to be done. So that is one part. Then after that, it has to ensure that the activities included in the CSR policy are actually undertaken. And here one has to note that, of course, many companies would have a long list of activities included in the CSR policy. It's not necessary that every activity has to be undertaken, but the activities included in the policy, at least some of them or all of them, should be undertaken. And it is not that some activity not included in the policy are undertaken. So that is the second part of the obligation of the board. And then the most critical aspect of the obligation of the board is to for the board to ensure that the company spends in every financial year at least 2% of the average of the profits, net profits made during the 3 immediately preceding financial years. So ensuring that the company spends is the most critical aspect. And then how that average has to be worked out, how the 3 immediately preceding financial are to be worked out are all laid down. So we will touch upon that shortly. For example, where the company has not completed 3 years since incorporation, then whatever are the preceding financial years, the average of the preceding financial years figures have to be considered. This is not visible now. Can we see that? It is visible to the other side. Yeah, it is visible. Okay. And then the other obligation is that all these activities have to be done in pursuance of the CSR policy. And then it has to give preference to the local area or areas around which it operates for spending. So again, there are some FAQs by MCA on this. We'll get into that a little later. So here it has to be noted that it is only the preference which has to be given. It's not mandatory that the company has to spend in the local area around it where it operates. Okay. And then, okay, this is as far as the obligation to spend that amount. And what happens if the company fails to spend such amount? In that case, the board has to, in its report, specify the reasons for not spending, and then you have to break it up into two parts. If it relates to other than ongoing project, then it has to transfer such unspent amount to the prescribed fund, and within 6 months from the end of the financial year. So if 31st March 2023 is the financial year for the company, and if there is something on other than ongoing projects, then that unspent amount has to be transferred within 6 months, which means by 30th September, it has to be transferred. But if it relates to any ongoing project, then it shall be transferred within 30 days from the end of the financial year to an account called unspent CSR account in a scheduled bank. And that amount, which is transferred to the unspent CSR account, has to be spent as per the CSR policy within a period of 3 financial years from the date of such transfer. In other words, taking the same example, if there is an unspent amount for relating to an ongoing project as on 31st March 2023, then that amount has to be transferred to an account called unspent CSR account to be opened in a scheduled bank, and that amount has to be spent as per the CSR policy within a period of 3 years, which means by 2026 it has to be it has to be spent. And if by chance, if even up to 2026 there is still some unspent amount remaining, then that amount will have to be transferred to the prescribed fund within 30 days from the end of the financial year, which means by 30th April 2026, that amount will also have to be transferred to the fund. The same fund which we just mentioned about, where it is another than ongoing project, where we are transferring there, this same fund, it will be transferred there by 2026. And new provision which has come in is where the company spends in excess of mandate. Then now there is a facility which has been given. It can be set off against the requirement in any of the subsequent succeeding 3 financial years. So earlier, whatever amount was spent in excess of the mandate, of course, there was no provision for set off. But after the 2021 amendment, now this set off provision is available, and you have 3 years in which you can set it off against your CSR liability of the next 3 years. And another important part is about the default in compliance. Earlier, of course, it used to be kind of a criminal offense, but after the amendments, fortunately, now it has been changed into a civil offense, and it is it's only resulting in a penalty, which will of course be twice the shortfall or rupees 1 crore, whichever is less. And even the officer in default will also be liable to a penalty, which will be up to 1/10 of the shortfall or 2 lakhs, whichever is less. And if the mandate is less than rupees 50 lakhs, there is now no requirement to constitute a CSR committee, because this amendment also came with, I think, after a lot of representation from the corporates and then corporate bodies and the CII and FICCI and others, that where suppose the mandate is only for 15 lakhs, the requirement of having a CSR committee and all those compliances were quite unnecessary. So if the mandate is less than 50 lakhs, There is no requirement to constitute a CSR committee, and that entire responsibility can be taken up by the board itself. And then, how do you calculate the net profit? When you calculate the average of net profit for the 3 years, that is also very important to know. And this is a net profit calculated as per section 198. And so you have to first arrive at the profit as per section 198, which is also there for the managerial remuneration. And then from that, you have to exclude certain amounts as per the rules, CSR rules. So then you arrive at the final figure on which the CSR mandate is to be calculated. Now, I think we will quickly go through some of the activities which are covered under Schedule 7. And one can note that this is a very wide variety of activities which can be covered under Schedule 7. And it has been expanded also from time to time. And it has to be also viewed in a very wide way. And MCA also has mentioned that there can be a liberal interpretation there, and one need not be very, make a very strict legal interpretation of some of the terminologies there, and then liberal interpretation is allowed. And if you look at the activities included in Schedule 7, the first, of course, most important part is the eradicating hunger and poverty, malnutrition, promoting healthcare, then sanitation, safe drinking water, etc. So that is one aspect. Then the very popular CSR activity for many companies, promoting education and employment enhancing vocational skills. So here again, the skilling projects, etc., they all come in there. And then promoting gender equality, empowering women, old age homes, facilities for senior citizens, and then helping socially and economically backward groups, etc. Then environmental sustainability, the flora, the fauna, and conservation of natural resources, etc. They are also covered there. Then, of course, maintaining the quality of soil, air, water, etc. also, and contribution to the Ganga Fund also gets covered under this aspect. And then you have the protection of national heritage, art and culture. That also is one of the important activities. And it includes, of course, the restoration of buildings and sites of historical importance and works of art, and setting up of public libraries, promotion and development of traditional arts and handicraft, etc. And then you have the armed forces, veterans, measures for the benefit of the armed forces, and then the war widows and their dependents, etc. This is also getting covered. And then training to promote rural sports and nationally recognized sports and Paralympic sports and Olympic sports. So sports also has been given due recognition there. And then contribution to the PM's National Relief Fund or the PM's Care Fund or any other fund set up by the central government for socio-economic development and relief and welfare of scheduled castes, scheduled tribes, and other backward classes, minorities, and women. That's also getting covered there. And then contribution to incubators, R&D projects in the field of science, technology, engineering, and medicine, funded by the central government or the state government are also covered. And then you have the rural development projects, which are also covered under the Schedule 7. And slum area development. And of course, slum area has also been defined as an area declared as such by the central government or any other state government or any other competent authority. You will note that urban area development is not covered. Okay. And disaster management, including relief, rehabilitation, reconstruction activities, they are also covered. So these are some of the important activities, and the CSR policy that the company frames will have to mention the activities, any of these activities schedule mentioned in Schedule 7. Now, I think this is the basic structure as far as the statute is concerned, but most of the important provisions are contained in the rules, and that I think is very, very important to note. And let us look at some of the important aspects covered in the CSR rules. And some of the important definitions I'll touch upon. And for example, administrative overheads is a very important thing which you have to consider. And for example, the general management and administrative expenses for CSR functions would be, but at the same time, it shall also exclude expenses directly incurred for designing, implementation, monitoring, and evaluation of a CSR project. So the reason behind excluding those expenses are because those expenses which are directly incurred for designing, implementation, or monitoring and evaluation, they are actually considered as part of the cost of the project itself, and therefore it need not be shown under the group of administrative overheads. Then the CSR activities. So what are CSR activities? Because there is so much of mention about CSR activities in that section 135. So we should know what exactly is meant by CSR activities. And it is, of course, apart from the activities covered under Schedule 7, there are certain specific activities which are not to be considered as CSR activities. And these are something which are very important. The activities undertaken in pursuance of normal course of business. And so if it is considered undertaken in pursuance of the normal course of business, they are not CSR activities. And if it is undertaken outside India, again, it's not CSR activity, unless it is for training of Indian sports personnel. And then contribution directly or indirectly to any political party is also not CSR. And activities benefiting employees of the company. And if it is purely for the welfare of the employees, it is not CSR. Then anything done as a sponsorship basis for deriving any marketing benefits, they are also not CSR activities. And if the activities are conducted and if the expenditure is incurred only for fulfillment of any statutory obligations, that also is not a CSR activity. Now, the CSR policy, what it should contain is also clearly defined. And CSR policy means a statement containing the approach and direction given by the board with recommendation of CSR committee. So naturally, the CSR committee has to first recommend it and then the board has to approve. And basically, it gives the guiding principles for the 3 stages, which means at the selection of the project, then the implementation of the project, and monitoring of the project. So, and then finally, formulation of the annual action plan. So, the guiding principles for all these activities, for all these stages, selection, implementation, monitoring, or the formulation of the annual action plan, they all should form part of the CSR policy. And now let us look at the definition of net profits as defined in the rules. Of course, as we mentioned, it is as per section 198, but it shall specifically exclude certain items. And what are the items which are to be excluded? Any profit from any overseas branch, because as you would have noticed, say for example, CSR expenditure outside India is not a CSR expenditure. Similarly, if there is any profit from any overseas branch, that is not to be considered for calculation of the mandate. So the 2% you need not consider for that, because just as you cannot spend overseas, you also cannot be made liable for some profits on the overseas branches. And dividend received from other companies in India, provided they are covered under 135 and they are also complying with 135. So that means if there is a company within India in which the company has made investments and then dividend has been received, and if that company has already complied with Section 135, there will be no double taxation. You might, in inverted commas, we can say, there will be no double liability on the same profit. So the dividend received from other companies in India would be excluded, and then on the net of this net profits, you calculate the mandate for the company. Then ongoing projects, because we had discussed about ongoing projects and other than ongoing project. So ongoing project is a multi-year project undertaken in fulfillment of its CSR obligations, having timelines which do not exceed 3 years. So earlier, of course, there were projects which were ongoing for even 5 years and 10 years. So now there is a limit which has been given. Now it should not exceed 3 years, but in calculating the 3 years, you exclude the financial year in which it commenced. So which means if you have started a project in, let's say, October, let's say 22, then October 22 to March 23 is to be excluded. And 3 years will be calculated from 1st April 23 up to, let's say, 31st March 26. So it is 3 years plus that year in which it was approved. And there is also a provision which says that initially it might not have been made as a multi-year project, but it may turn into a multi-year project. But if it gets converted into a multi-year project, then it has to be backed up by a board approval, and there has to be a reasonable justification for converting that single year project into a multi-year project. And some of the other important provisions which are relating to companies where they cease to be covered under Section 135 for 3 consecutive financial years. So if, let's say, initially you were covered and therefore you had constituted a CSR committee, and for 3 years in a row you are not liable under 135, then if it's 3 consecutive years, then you need not constitute a CSR committee and comply with other provisions. In other words, you can disband the CSR committee that you have. Then CSR implementation. Yeah. And then the CSR implementation can be undertaken by several methods actually. And it can be done directly. So it can be done by itself, or it can be through a Section 8 company or a registered public trust or a registered society. But at the same time, all these entities will require to have a 12-year registration and also a ATG certificate approval and under the Income Tax Act. And it should also be established by the company either singly or along with any other company. And where it is not established by the company, then that entity will be required to have an established track record of at least 3 years and in undertaking similar projects. So if you are wanting to make a contribution to an entity, let's say a Section 8 company in education project, and if it doesn't have a 3-year record in undertaking similar projects in education, then you cannot do it. So it has to have an established track record in the same field, in the same similar projects. And then the implementation can also be, will also require the entity to have a CSR1 registration with MCA. And the next is the board has to satisfy itself that the funds disbursed are utilized for the specified purposes. And for the board to satisfy itself, it may rely upon a certificate from the CFO. In fact, the CFO is required to certify that the funds disbursed are utilized for the specified purposes. And the board is also required to monitor the implementation of the ongoing project as per the approved timelines. And it also needs to see the year-wise allocation and so on. So it has to be, our board has to take care of all that. Then some more CSR committees obligations have been mentioned in the rules. Apart from all those obligations which we saw in the section, it has to formulate and recommend to the board an annual action plan. This is a new thing which got introduced in the year 2021, annual action plan, which shall include inter alia the list of CSR projects or programs which are approved, the manner of execution of those projects, the modalities of utilization of funds and implementation schedules, and then the monitoring and the reporting mechanism, and the need and impact assessment, if any. So if a particular project needs any need assessment, or if it requires impact assessment, either voluntarily or mandatorily, all that part has to be mentioned in the annual action plan. And the board has power to alter the plan at any time, of course, subject to recommendation from the CSR committee, but it has to be based on some reasonable justification. Otherwise, if there is no reasonable justification, you cannot just, in the whims and fancies, you cannot alter the plan. We had seen a little bit about administrative overheads definition. So the other part we remembered is that it shall not exceed 5% of the total CSR expenditure for the financial year. So you cannot have administrative overheads to the extent of say 40% of the project, etc. So it is, while it is necessary, I mean, you have to keep it under control, and therefore it cannot exceed 5% of the total CSR expenditure. And any surplus arising out of the CSR activities shall not form part of the business profit. So whatever surplus, suppose certain activities yield some surplus for the company, they cannot become part of the profits, and it shall be plowed back into the same project. I mean, you have 3-4 options to do so. It can be plowed back into the same project, or it can be transferred to an unspent CSR account from which it can be spent again, or it can be transferred to a prescribed fund, as the case may be. So you have all the 3 options. And the excess amount spent, which we saw, which is a new addition in 2021, can be set off in any of the 3 succeeding financial years. But for this, the requirement is that there has to be a board resolution to that effect, and the board has to duly consider the need to set off that amount in any of the 3 succeeding financial years. Then you have provision with regard to capital asset acquired or credited, and that shall not be held by the company, and it can only be held by a Section 8 company, trust, or the society, or the beneficiaries of the project, or a public authority. And if by chance those are held by the company, those have to be transferred within the prescribed period, but that period is already over now. Then we come to the CSR reporting. Annual report on CSR shall be part of the director's report. And what are the contents of the annual report? we'll go into a little while from now. And now, which companies and for which projects one needs to undertake impact assessment is another point, very important point. And where the company's CSR obligation is over 10 crores in the previous 3 years, average of the 3 financial years, it has to undertake an impact assessment through an independent agency where the project has an outlay of more than 1 crore. And it has to be only after an expiry of 1 year from the completion of the project. So, which means 3 conditions had to be met. One is, of course, the obligation has to be more than 10 crores in a year. And then that each project should have an outlay of more than 1 crore. And at least 1 year should have elapsed. So if these 3 conditions are met, this impact assessment is mandatory. But voluntary impact assessment is possible. It can be done. An impact assessment report to be placed before the board. It has to be placed before the board and annexed to the annual report. And of course, some relaxation has been provided in the FAQs by saying that it can be given by way of a web link so that you don't have to load the annual report with too many assessment reports, impact assessment reports, and increasing the number of pages in the annual report. And other important aspect is about the expenditure that can be incurred on impact assessment. Of course, there is a little relaxation there. Now it shall not exceed 2% of the total CSR expenditure or 50 lakhs, whichever is higher. So this is a good salutary provision in the rules. So which means you can spend up to 2% or 50 lakhs, whichever is higher. Earlier it was 5% or 50 lakhs, whichever is lower. So now this is much better. Then company shall also disclose on the website the composition of the CSR committee, the CSR policy, the projects approved by the board, etc. Now, the annual report for CSR, which I think most companies must have already done for the year 22-23, but what it should contain is also clearly laid down in the rules. And of course, it has to start with a brief outline on the CSR policy, the composition of the CSR committee, the number of meetings held, attendance of the directors or members there, and then the details of impact assessments carried out during the year, amount available for set-off, and then the computation of CSR obligation for the financial year, then the CSR amount spent or unspent on ongoing projects as well as on other than ongoing projects, and the details of unspent CSR account for preceding 3 financial years. Of course, when it got introduced, naturally for the preceding 3 financial years it was not applicable, and it started only from 21. So, but by next year, then we will have the figures of 3 financial years where there is really transfer of unspent CSR account and opening of that account. The details would come in there. Then the details of CSR amounts by the managing director and or chairman of the CSR committee. And then, as I mentioned, a lot of circulars have been issued on for all the companies to cope with the changes which were happening. And but the most important circular for us, I think, is the circular of 25th August 21, because that is the most comprehensive circular currently in force. And I think it will be useful to go through that particular circular in detail, and some of the aspects, some of the issues which have been covered have been listed in this presentation. But I think it's a fairly comprehensive circular which was issued. And I think most important point to be noted is that it was in a supersession of most of the clarifications, FAQs issued by MCA in the past, whether it was that 18 June 2014 circular, 17 September 2014 circular, 12th January 2016, May 16, and then 25 2018, and general circular of 28th May 2018. And many of these circulars which were issued were all superseded by this circular. And so if there is anything conflicting, so naturally this would prevail and not the earlier one. So now I'll very quickly go through some of the important aspects which have been shown in the circular. Now, as I mentioned, applicability of CSR. In that section, a lot of FAQs have been provided. So, which companies qualify for CSR under the Companies Act? So, which we have discussed. So, it has been again clarified that what is to be seen is only the immediately preceding financial year for calculating the threshold, whether the net worth condition or the turnover condition or the net profit. So everything has to be in the immediately preceding financial year. And the next question is whether a holding company or a subsidiary company of a company which is covered under 135, whether that also has to fulfill the conditions of CSR. So there it has been very clearly mentioned that all these provisions are on a standalone basis. So if it is applicable to the company, it's not necessary that the holding company or the subsidiary company also will get covered. If on its own, if those companies meet the thresholds, then they'll be covered. Otherwise, by only virtue of this company being covered, the holding of the subsidiary company will not get covered. Then whether a Section 8 company gets covered under CSR. Section 8 company, because the section clearly provides that every company, they start the section with every company. So which means every company would include Section 8 company as well. Then whether what happens where a company has not completed 3 financial years since its incorporation. So that it is mentioned that where it has not completed 3 financial years, and if it is completed only say 2 years, then it will be average of the 2 years which will have to be considered. And again, about the composition of the CSR committee, which we have mentioned, but of course MC has again clarified. For listed companies, it has to be 3 or more directors with at least 1 director being an independent director. Then unlisted public companies, then it will be 3 or more directors, again out of which 1 shall be an independent director. But if there is no requirement of having an independent director, then 2 or more directors. For private companies, since ID provision is not applicable, any 2 directors, 2 or more directors can be part of the committee. And for foreign company, 1 shall be as specified in section 380, another shall be nominated by the foreign company. So, and again, as we mentioned, if the CSR liability is less than 50 lakhs, there is no need to constitute a CSR committee. And what are the functions of the CSR committee, which we have already seen? So, they have, again, for more clarity, they have brought out the same points. That is formulating and recommending the CSR policy, recommending the amount of expenditure to be incurred, monitoring the policy and formulating and recommending the board an annual action plan every year. And then where, of course, there is no requirement to have a CSR committee, those requirements, responsibilities would be discharged by the board itself. And what are the responsibilities of the board in relation to the CSR provisions? There, it's mentioned repeatedly in the MCA circular that the entire CSR thing is a board-driven process, and therefore it is the entire thing is going to be managed by the board itself, and there is no involvement of the government there. And it will inter alia approve the CSR policy, disclose the contents of such policy in the annual report as well as on the company website, ensure that the activities included in the CSR policy are undertaken, that 2% of the average net profits of the company are spent. It shall also satisfy itself regarding the utilization of the disbursed CSR funds. And if the company fails to spend, it will clearly indicate how much, the reasons for not spending, and then also transfer this unspent CSR amount as per section 135, 5 and 6. And another question that is asked is, what is the role of the government in the approval of the implementation of the CSR project? And again, MCA has very clearly laid down that there is no involvement of the government, and it is all a board-driven process, and the board is fully empowered to plan, approve, execute, and monitor the CSR activities of the company. And while, of course, there is no direct role for the government, either the approval or the implementation of the CSR project, but they will monitor the compliances by different companies, and where a company has not complied with the requirements, of course, MCA can send notices to the companies and take necessary action. And another question is, what are the mechanisms for monitoring the CSR process? So now I think even the section itself, section of the rules themselves have provided many mechanisms for monitoring the CSR process. And for example, the board is going to decide and plan, execute and monitor the CSR activities based on the recommendation of the CSR committee. And the entire structure is disclosure based, and the CSR mandated companies are required to file details of the CSR activities in the MCA 21 registry annually. And necessary disclosures are to be made in the financial statements, and the existing legal provisions as well as the mandatory disclosures, accountability of the CSR committee. I mean, there are sufficient mechanisms which have been provided in the section and the rules for monitoring the CSR process. And the other question that came was, what is the role of the government in monitoring the compliance? So government monitors the compliance by various companies through the MCA portal, and any violation, of course, action can be initiated, and then after due examination of the records, they can, of course, levy any penalty for the company and the officer in default. But it is notified as a civil wrong with effect from 22nd January 2021. And we have also discussed about how that section, that net profit before tax is calculated, or the average net profit is calculated. And sometimes the question comes up whether it is profit before tax or profit after tax. And of course, it is profit before tax which has to be considered. And of course, the manner of calculating the profits will be as per section 135, which again in turn says it has to be under section 198 and so on. Then about administrative overheads. What are administrative overheads? So this again is a very important provision. While it is mentioned that it is only the general management and administration, so always the question arises, what is general management and administration function? So if it's basically items like employee costs, utilities, office supplies, legal expenses, etc. They are all considered as general management and administration costs. But if the expense is directly attributable to the project implementation, then that will be considered as part of the project cost, and it will not be part of the administrative overheads. And then the expenses directly incurred for the designing, implementation, or monitoring and evaluation of a particular CSR project or program will also not be part of the administrative overheads and will be part of the project cost. Now, for example, MCA itself has given an example in the FAQ. If there is a project for running a school, and if, let's say, salary is paid to the teachers, and the salary paid to teachers would be the major expenditure for such a project. So the salary paid to the teachers will not be considered as an administrative overheads, because that is very much part of the project cost itself. So education related CSR projects, so naturally the salary paid to them would be as a project cost. Similarly, if there is a salary paid to the doctors in a running of a hospital, then that salary will not be shown as a administrative overheads. It is a direct project cost. And of course, we have seen that there is a limit for administrative overheads. It cannot exceed 5% of the total CSR expenditure for the financial year. And then whether administrative overheads incurred by an implementing agency, whether that also can be covered under this 5%. So it cannot be, because administrative overheads, it is applicable only for the expenses incurred by the company and not by the implementing agencies, because whatever is incurred by the implementing agencies can actually form part of the project cost itself, and therefore that is not a administrative overhead. Then meaning of surplus generated from CSR activities is so basically interest income which is earned by on the funds provided under CSR, because suppose a lot of funds are given and those funds are kept in a fixed deposit for some time, temporary period, and interest is received on that. That interest is also part of the surplus. And similarly, revenue received from the CSR projects, if it is suppose revenue is received on a school project or a college project or a hospital project, so that is also a surplus. Or disposal or sale of materials used in the CSR projects and other similar income sources. So all these surpluses cannot form part of the profits of the company. It will be part of the CSR. It has to be spent back in CSR activities. Can a contribution to the corpus be an admissible CSR expenditure? So any provision relating to contribution to corpus now after the recent amendment will no longer be an admissible CSR expenditure. So you cannot give any money for a corpus of a fund. And whether expenses relating to transfer of the capital asset, whether that will qualify as a CSR expenditure, because suppose the assets are currently held in the name of the company and the company is transferring it to the one of the entities which are allowed there under the rules, and if there is a transfer expenditure incurred, what happens to that? So it is being clarified that it will qualify as admissible CSR expenditure in the year of the transfer. And if the company spends more than the required amount, whether it can be set off, yes, it can be set off. And the question can come up as to what happens to, let's say, excess amount spent in the year, let's say 2021 or 1920 or 1819, etc. Whether you are eligible to set it off. No, you cannot, because this is applicable only after 22nd January 21. So for the prior years, I mean, there's no carry forward of that excess amount spent. Whatever excess amount to spend, that lapses. And how long the surplus amount, excess amount spent can be a set off. So suppose you have an amount of, let's say, 5 crores which has been spent in excess. So that 5 crores has to be adjusted in the next 3 years. And let's say for some reason for the next 3 years, there is no mandate at all. I mean, the expenditure is nil. So whether that 5 crores, what happens to that 5 crores can be a question. So whatever excess spent, and then if there is no mandate, I mean, you cannot set it off against anything else, and it just lapses. So that means the set off is only against any other CSR liability. Then whether it is mandatory for companies to carry out CSR in the local areas, and there it is very clearly laid down that it is only a preference that has to be given. It is only a directory provision, not mandatory. And the companies may, in certain circumstances, be required to spend outside the local area, and maybe to comply with certain national priorities or some other important goals of national development and so on, or sustainable development goals and so on. So if the company spends somewhere else, that is also perfectly allowed. And then again, many activities today transcend the geographical borders and the boundaries, and therefore it can apply across the country. And then therefore, so such provision is only recommendatory. As far as possible, you spend it near the area in which you operate, but otherwise there is no compulsion to spend it there. Then whether it can be claimed as a business expenditure, I think the IT Act has very clearly laid down that this cannot be a deductible CSR expenditure, a deductible expenditure for income tax purposes. And whether there is any other tax benefit available for CSR, there are no tax exemptions extended to CSR expenditure. And of course, the question can come up: what happens to the ATG certificates which come? So I think still there is many companies are claiming, but at the same time, there is no certainty that the ATG deduction would be available to such companies. Whether contribution in kind can be monetized. So that whether you can do the expenditure by way of in-kind expenditure. So there it is very clear that because the section clearly lays down that it spends so much amount, so that means they are expecting actual expenditure and not in kind. So no monetization is allowed, and it cannot be in kind. And can a company go beyond Schedule 7? So there again, we just discussed that aspect, that it must be relatable to Schedule 7. And if you go beyond Schedule 7, you will not be eligible for the CSR mandate part, and it will not get covered under CSR. But at the same time, we must note that items listed are already pretty broad-based and are intended to cover a very wide range of activities. And the entries also would be interpreted very liberally, and to ensure to capture the essence of the subjects enumerated in the schedule. So it is basically the spirit which has to be followed, and then so long as it's covered in the spirit within the Schedule 7, it's all fine. And what are the modes of incurring CSR expenditure? Of course, one is the activities route. The company can directly spend that amount, and it can undertake the CSR projects as per Schedule 7. And it can also do it through some of the implementing agencies, which could be Section 8 company or a registered society or registered trust. And the other mode could be the contribution to funds route, which allows contribution to various funds specified in Schedule 7, and contribution to incubators or R&D projects, contribution to certain institutions and organizations engage in research and development activities, which are as specified in Schedule 7. And those are also covered. And then what are the funds, prescribed funds? Because time and again we have discussed that it may have to be transferred to a prescribed fund. What are those prescribed funds? Some of the funds are Swachh Bharat Kosh, Clean Ganga Fund, Prime Minister's National Relief Fund, or Prime Minister's CARES Fund, that is Prime Minister's Citizen Assistance and Relief in Emergency Situations Fund, or any other fund set up by the central government and notified by the Ministry of Corporate Affairs. So you will note that it is only set up by the central government and not by the state government. And whether any other fund set up for carrying out activities mentioned in Schedule 7, will it be admissible? So the Act does not recognize contribution to any other fund, which is not specifically mentioned in section Schedule 7. So it has to be specified there, otherwise it's not eligible. And whether the CSR funds are being utilized to, or can it be utilized for funding government schemes? See, the objective of CSR fund provision is to involve the corporates to be partners in social development process, and therefore the public good has to be served by the corporates as per the provisions. And it is not a source of funding for the government. It is not for financing the resource gaps of the government schemes. But the activities carried out by the companies can be activities which are carried out by the government. I mean, similar activities could be carried out, but it is not basically to meet the shortfall of a government scheme, etc. Whether involvement of employees can be monetized and accounted for under the head of CSR expenditure. So we had discussed about in-kind is something similar, whether involvement of employees can be monetized. Involvement of employees cannot be monetized because while contribution and involvement of employees is most welcome, and it will generate interest and pride in CSR work and promotion, will promote transformation from CSR as an obligation to socially responsible corporates. But at the same time, since monetization is not allowed, and as this section clearly provides that it has to be a spend. So whatever the salary paid to an employee, you cannot take pro rata and monetize that part. And which activities do not qualify as CSR activity, that I think we have discussed in detail. And then whether companies can undertake any CSR activity mentioned in Schedule 7 for the exclusive benefit of employees, workers, and their family members. So as we saw, the activities benefiting employees of the company shall not be considered as eligible CSR activity. But suppose there is an activity which is done to benefit the public at large, and it is absolutely non-discriminatory to any class of beneficiaries, but in the process, incidental beneficiaries are some employees, then that project will not be disqualified. And so it is only an incidental matter that some employees have benefited. But basically, the project is by and large for benefiting the public at large. If that is the case, it is definitely permissible. But otherwise, if it is purely for employees, then that would not be considered as a CSR expenditure. I think during the COVID time, I think during the pandemic time, we had a lot of companies spending exclusively for employees, where it was spent exclusively for employees, whether it was for vaccination or for medicines or any other aspects. So that could not be covered as CSR expenditure. But if, let's say, vaccination is provided to the entire citizens of the city, and some of the employees incidentally benefit in that, then that will be considered as a CSR expenditure. And then what is sponsorship activities which are excluded? So there, sponsorship activities basically are done with the aim of deriving marketing benefits for a company's product and services. The intent of CSR is to encourage companies to undertake the activities in a project or a program mode rather than as a one-off event. Sponsorship activities are by and large one-off activity, and one-off activities are not encouraged. And such sponsorship activities only to for brand building of the company or marketing or brand building tool. So that will not be covered as a CSR expenditure. But if it is an incidental benefit that is derived by the company, then that will not disqualify the expenditure to become CSR expenditure. Or activities undertaken by companies outside India for the benefit of resident Indians permitted. So here, any activity undertaken by the company outside India shall not be an eligible CSR activity. And therefore, even if it happens to be resident Indians living abroad, it will not be covered as a CSR expenditure. Of course, the only exception is that where there is a training of Indian sports personnel representing the state level or the national level or the international level, then if they are representing them, then the training expenses would get covered under CSR. And how can the companies with small CSR funds take up CSR activities in a project board? So if a particular project is well designed, it can be managed with even small funds. And at the same time, there is an option available to the companies to join hands with other companies for undertaking CSR activities by way of pooling their activities, CSR activities. Now coming to the implementation aspects. So as we have seen, the CSR modes of implementation can be by the company itself or through the eligible implementing agencies, or implementation in collaboration with one or more companies as prescribed under sub-rule 4 of Rule 4. And of course, we have already seen which are the bodies, entities eligible to act as an implementing agency for undertaking CSR activities. We've already seen that it's basically the company established under Section 8, or a registered public trust or registered society, of course, with 12A registration and ATG approvals, or an entity established by the central government or state government. So there, of course, naturally, they may not require 12A or ATG certificate. Statutory bodies, entity established under an act of parliament or state legislature, or other bodies, that is a company established under Section 8 or a trust or a society registered under 12A and ATG, but having an established track record of at least 3 years in undertaking similar activities. Now, whether all such entities are required to have income tax registration under 12A, ATG, etc. Yes, all the 3 types of entities, Section 8 or a trust or a society, will all require to have income tax registration under 12A or approval under ATG. Otherwise, they will not be eligible for CSR. Then, registered public trust. There are many states where registration is not compulsory. Many states where trust need not be registered at all. So what happens there? So there, the registered trust will be those trusts which are registered under the Income Tax Act, where registration of public trust is not mandatory. So there could be no charitable. There could be a situation where there is no charitable commissioner there, but if it is registered under the Income Tax Act, they will also be considered as a registered public trust. What is the purpose of registration of the implementing agency in MCA 21 portal? So that question keeps coming up as to why CSR 1 is required to be filed. So that is only to have a proper statistical record, to have proper accountability as well as transparency in the implementation of the CSR activities, and basically to strengthen the CSR ecosystem. Is it mandatory for every implementing agency to register on the MCA 21 portal? So again, it's clearly laid down that every implementing agency shall mandatorily register itself in the MCA 21 portal with effect from 1st April 21. And whether a company can do CSR project with a company not registered under CSR 1 up to 31st March 21, yes, it was very much possible. We could do it without the company having gone for CSR 1. And even after that, if the approval has taken place prior to 31st March 21, the registration is not a must. But for any new project after 1st April 21, CSR 1 registration is compulsory. Whether registration, whether it is necessary if the company does the projects directly. So naturally, the company need not register itself under 80G or 12A if it is doing it directly. It is applicable only for those three types of entities. Can international organizations act as an implementing agencies? International organization cannot act as an implementing agency. And what is the role of international organizations in CSR? So now, international organizations are allowed only to a limited extent. Then it is they can be used for designing, monitoring, and evaluation of CSR projects, and for capacity building of personnel of the company involved in CSR activities. So for a limited purpose, international organization can be used for in the context of CSR. Now, let us look at some of the clarifications with regard to ongoing projects. Which projects can be considered as ongoing? So, any multi-year project stretching over more than one financial year. So, it could be just 10 months, but if it is spread over 2 years, financial year, suppose it is done in, let's say, November 22, and it gets over in July 23. It may be less than 12 months, but since it is spread over 2 financial years, it can be considered as a multi-year project. It can be an ongoing project. It is because it is stretching over more than one financial year. So 12 months criteria is not to be considered. And at the same time, ongoing project cannot have a timeline of more than 3 years, of course, excluding the year of commencement, and include such project that was not approved as multi-year project in the initial stage, but whose duration has been extended beyond 1 year by the board based on reasonable justification. Suppose you have planned to do it in April, you have commenced the project. Plan was to complete it by February of the coming year. So that means in a period of 10 months, it was supposed to be completed. But for some reason, it has to be extended beyond that financial year. And the board can approve that with reasonable justification. Then what starts off as a single year project can become a multi-year project. Only thing is, it should have commenced in the financial year to be termed as ongoing, and it should have extended to the next year. And it has to have an identifiable commencement date and an identifiable completion date. And after the completion of any ongoing project, the board is free to design any other project related to the operation and maintenance of such completed products as may be deemed fit on a case-to-case basis. So that means even if it is completed, then it can design any other project related to the operation and maintenance of the project. When do you say that a project has commenced? Is the next question. Commencement is when the company has either issued the work order pertaining to the project or awarded the contract for execution of the project. So if it is, so it's not necessary that the actual project work should have started. Even if you have given the work order pertaining to the project or awarded the contract for execution of the project, it would be deemed to have commenced. And what is the maximum permissible period for an ongoing project? And can it be extended beyond the permissible period? So maximum period we have already seen is only 3 financial years, apart from the year in which it commenced. And under no circumstances, the time period of an ongoing project can be extended beyond its permissible limit. And then, what are the responsibilities of the board in case of ongoing projects? So, there are many responsibilities of the board in case of ongoing projects. One is, of course, starting with identification of the ongoing projects, year-wise allocation of funds, transferring the unspent money to a separate bank account as prescribed under subsection 6, then monitoring the implementation of the projects with reference to the approved timelines and year-wise allocation, making modifications of the projects within the overall permissible time period. So, can it be implemented? Can the ongoing project be implemented through implementing agencies? Of course, once the board has approved the project as an ongoing project, it can choose to implement it through any of the implementing agencies. Does the board have the power to abandon or modify an ongoing project within the permissible period of 3 years? As per provisions of the CSR rules, it can abandon or modify an ongoing project partially or wholly under exceptional circumstances during the prescribed project period, but after providing reasonable justification to that effect. It's important to keep in mind that the maximum permissible period, again, as mentioned earlier, is only 3 years, excluding the year of its commencement. Can funds used earmarked for a particular project be used for another project? Normally, no. The budget outlay dedicated for one project should be used again in the same project. But where the board and the CSR committee record the alteration in the target spending and modify the same, it can be done. Then the treatment of CSR amount, we have already seen, where the company spends less than the mandated amount. It has to specify the reasons for not spending and deal with in this manner, where it pertains to ongoing projects, transfer such unspent amount to a separate bank account to be called the unspent CSR account, and within 30 days from the end of the financial year. Unspent amount pertaining to other than ongoing projects, transfer unspent amount to any fund included in Schedule 7, and within 6 months from the end of the financial year. Where the company was unable to meet its CSR obligation but transferred the said unspent amount to any fund included in Schedule 7 of the Act, will the same be considered as compliance under Section 135? Say, for example, the compliance is fulfilled when the company spends the prescribed amount as per the obligation. In case it fails, it shall fulfill the obligation by transferring to the Schedule 7. And the MCA has very clearly laid down that once the transfer is done, it will be considered as full compliance under Section 135(5). But the board, of course, will have to give a requisite disclosure in the board report and the annual report. Now, another question can come up. 6 months' time is there to transfer it to the fund. If within that period, suppose you want to spend some amount in any of the activities, whether it is permitted, the companies are not permitted to spend the amount, the unspent CSR amount, on any CSR activity during the intervening period of 6 months. Because once that period is over and it's on other than ongoing projects, it has to be transferred to the fund. And you cannot take up some activity during that period. Whether disbursal of funds will be considered as spent. So this is a very contentious provision where the question was raised as to whether just a dispersal of the amount to the implementing agency will be considered as spent by the company. But then I think FAQ has gone a little beyond the act and has said that mere disbursal of funds for implementation of a project does not amount to spending unless the implementing agency utilizes the whole amount. So they have introduced a new requirement which was not there, which is not there in the act nor in the rules. And it says that the implementing agency also has to utilize the full amount. So in the annual action plan, the CSR committee is required to provide the modalities of utilization of funds. And the CSR committee also shall recommend to the board budget allocation for any CSR project, including modalities. So the board is anyway required to satisfy itself that the funds so disbursed have been utilized for the purposes and in the manner as approved by it, and the CFO is also certifying to that effect. Here, there is no requirement that, at least in the act and the rules, they're not saying anywhere that it has to be spent in the same year. But the MCA has taken the interpretation that when they say that it has been utilized for the purpose in the manner, they are expecting the thing to be done in the same year. And if it is not utilized by the implementing agency for the purpose, then it will not be considered as expenditure. And so it is very clearly laid down that mere disbursal of funds does not amount to spending unless the implementing agency utilizes the whole amount. And again, another point that comes up is whether a company can open a special single account called unspent CSR account for a financial year and for all years. But clear, I mean, its provision is very clear. Company needs to open a separate unspent CSR account for each financial year, and it is not project-wise, and it is year-wise. And can the amount transferred to unspent CSR account be utilized for regular business? So obviously, it cannot be. The unspent CSR account can be utilized only for the respective CSR projects and programs which are listed down there. And only if change is to be made, it has to be made with the approval of the board and the CSR committee. So, can an ongoing project initiated by a company in any previous financial year be classified as an ongoing project under section 135(6)? Is the unspent amount of previous financial years also required to be transferred? So, if suppose there is an unspent amount of 1920 or 1819, whether that is also required to be transferred? No, because that time the provision was not applicable. So, these provisions are coming into effect from 22nd January 21, and therefore it has only a prospective effect and is not applicable to the previous financial years. And what is to be done about the shortfall of the previous years? The board is entirely within its within its liberty to decide whether to spend that amount or not to spend that amount. Now, CSR enforcement. CSR enforcement, what are the penal provisions? We already seen. It can be twice the unspent amount, or 1 crore, whichever is less, and for every officer in default, 1/10 of the unspent amount, or 2 lakh, whichever is less. And whether the P&L provisions will apply even after the unspent amount has been transferred to the unspent account or to the funds mentioned in Schedule 7. The penalty does not relieve the company from the obligations under the law. So, which means the penalty is over and above the obligated amount required to be transferred, and the penalty is only the consequence of not abiding by the law, and it is not an alternative for the same. So, whatever other consequences are there, those will continue. Is the penal provision in 135(7) specific to non-transference of the unspent CSR account? So, the penalty for default in complying with the provisions of subsection 5 or 6 is 135(7) is only with regard to 135(5) and 135(6). And if it is non-compliance with in relation to some other provisions of section 135, what happens? So there it has been clearly laid down that the general penalty under section 450 will be applicable, and provision of section 134(8) will also can be applicable, but the 135(6), 5 and 6 will not be applicable. And then on the impact assessment, there are a lot of queries on that. What is the objective of providing impact assessment? Of course, is to assess the social impact of a particular project, and basically to encourage companies to take considered decisions before deploying the CSR amounts and assess the impact of the CSR spending. If they have spent a huge amount, but if they don't know how it has benefited the ultimate beneficiaries, it will be serving no purpose. And therefore, it has to serve as a good feedback for the companies to plan and allocate for resources better in future. And it shall also deepen the impact of CSR in the society and the community. And we already seen to whom it is applicable. So average CSR obligation of 10 crore or more in the immediately preceding 3 financial years, and companies that have CSR projects with outlays of 1 crore or more, and which have completed at least 1 year since completion. So impact assessment shall be carried out project-wise only in cases where both the above conditions are fulfilled. In other cases, it can be done by the company on a voluntary basis. So MCA is encouraging companies to go for impact assessment even on a voluntary basis, while mandatory provisions are there, but companies are encouraged to do impact assessments even on a voluntary basis, even if it is not covered under the requirement. Then, whether companies are required to undertake impact assessment for 2021, of course, that is now over, because it was basically that intervening transitional provisions. So it had provided that only where 1 year had passed, it becomes mandatory. But otherwise, the board may undertake impact assessment for completed years of previous financial years on a voluntary basis. And who has to conduct the impact assessment? It has to be done only by an independent agency. But who should be the independent agency? Of course, that is entirely within the prerogative of the board to decide. Then, whether the expenditure on impact assessment, is it over and above the administrative overheads limit of 5%, or is it part of the administrative overheads? So it's clearly laid down that administrative overheads 5% limit is different, and the limit of this 2% and 50 lakhs, whichever is higher, is different. And so that can be incurred separately, this can be incurred separately. Whether impact assessment reports of all the CSR projects shall be annexed to the annual report. Yes, as per the rules, yes, it has to be annexed to the annual report, but MCA has clarified that a web link to access the complete impact assessment reports and providing executive summary of the same in the annual report should also be sufficient compliance. And then whether when two or more companies collaborate with each other for a CSR project, who will conduct the impact assessment? So whether it can be shared by, and the cost, whether it can be shared by the other companies. Yes, if two or more companies collaborate, so impact assessment may be done by one company, but the expenses can be shared, and it can be decided by the decided mutually by the collaborating companies. And only thing, it will have to be subject to the limit mentioned in the sub rule. CSR reporting and disclosure. Whether reporting of CSR expenditure is mandatory in board's report. So here, the board's report pertaining to any financial year shall include an annual report on CSR containing particulars specified in Annexure 1 or Annexure 2. And then, is it also mandatory for foreign companies to give reports on CSR activities? Yes. Even if it is a CSR covered foreign company, then they also have to have an annual report on the CSR activities. And what are the disclosure requirements on the website of the company? Then the board of directors of the company shall mandatorily disclose the following on their website: composition of the CSR committee, CSR policy, projects approved by the board, and whether every project, irrespective of outlay and percentage, needs to be disclosed on the website of the respective company. Yes, as per the rules, is very clearly mentioned that every project, all the CSR projects approved by the board, are required to be disclosed on the website of the company, if any, for public access. Alternatively, it will have to be, a link has to be provided so that the readers can look at the list of all the projects approved by the board. I think these are some of the FAQs, and there are several other provisions, but I think I'll leave it to Mr. Venkatamana to take up further, because there are a few points with regard to annual action plan and a little regarding the annual report, etc. But I think we can take up all that in the question answer session.
Excellent, sir. Wonderful presentation, sir. Really delighted to have this presentation. The FAQs, whatever you have taken up, the FAQs what we got are almost similar, but still we have certain questions, sir. And friends, what else we want, from the legendary person who is chaired the expert group for ICSI CSR Excellence Awards. Really amazing, sir. Wonderful presentation. Sir, before taking up FAQs, I just want to give information on few ICSI initiatives. Our under able guidance of our president, sir, his own brainchild, that knowledge on demand is a concept which is introduced. All the presentations, like wonderful presentations like this, will be placed on the website of the ICSI, and on payment basis, we can view this kind of all the webinars, all the presentations. This will be useful for the members who could not attend this kind of sessions. So this is one of the initiative, friends. And another thing is ICSI is conducting a certificate course on the CSR certified professionals, and majority of our company secretaries are doing this certificate course. And this is also open for all other 3 professional institute members, and LLBs, LLMs, MBS also doing this course. Very useful course. And ICSI, of course, is conducting CSR Excellence Awards, and it is chaired by the expert group, which is chaired by none other than our J. Sridhar sir, speaker for the day. And friends, there is a guidance note on CSR which is released by ICSI. All your FAQs, if you are still having many of the questions after this session, you can go through that guidance note, which is very elaborative. And there are FAQs also released by the ICSI on CSR, apart from the MCA queries. So you can go through all that for your future reference. Now we will take up these sessions, queries, sir. I will take one by one query. So the first question is, can we make the provision in financial statements for CSR spending amounts in financial year 23-24 when spending was to be done for 22-23.
Okay. You mean
Because they have not spent, now they want to make a provision.
So 22-23, there is an unspent amount, correct?
Yes, sir. Yes, sir.
But if there is any unspent amount in 22-23, that has to be reported in the annual report of 22-23.
Yeah, yes, sir. Reporting and all they will do, but provision is to be created for spending that amount in books. That is what accounting perspective they are asking.
Okay. See, basically, once the provisioning will also have to be done in 22-23 itself. No? See, suppose in 22-23, suppose let's say 50 crores was the mandate, and let's say only 20 crores is spent. So 30 crores, depending on whether it is ongoing project or whether it is other than ongoing project. Let's assume that everything is ongoing project.
Yes, yes.
30 crores is transferred to the unspent CSR account, bank account. But that 30 crores will come as a provision in the books for 22-23 itself.
Yeah, because they are finalizing the accounts now in the accounts are under finalization.
Exactly. So they should show it as a liability for 22-23, and it is an amount which is transferred to the unspent CSR account.
Okay, sir. Fine, sir. The next one is when promoters make the payments for welfare of own servant through the trust, which is an NGO, will it be covered as a CSR activity? Like some of the companies directors, they will give it to some trust, some amounts, and ask to spend for welfare of their own servants and all. Whether it is covered, because ultimate beneficiary is again coming back to their own employees.
So, see, actually, if you go by the spirit of it, because one might say that it is not for the employees, but you will have to show that it is for a particular project or a program. So, even if you give it to a trust, it has to be for a specific project or a program. So, how do you give it to the employee under what ground? And so that it has to be in the form of a project or a program. So how it goes to the employee, but if it is just given as a salary to the employee, then that will not be CSR.
So it cannot be taken as a CSR activity because the ultimate beneficiary is your own servant or employee.
And again, there is no project in this. There is no
project. Yes, sir. Yes, sir. Then the next thing is there are certain projects under state government, such as like in Tamil Nadu, there is a Namakunama Tittam under the Tamil Nadu state government. And that is one question, sir. I'm clubbing with the other question of the similar question asked today.
Sure.
There are a lot of companies where management gets obligations from the state governments or district collector offices and all that to contribute for so-and-so under CSR. Whether those things can be treated as a CSR expenditure. I'm clubbing two questions of two different participants.
Sure.
Yes, sir. Please answer, sir.
Yeah. So, see, if it is, let's say, if it is coming from the collectorate in a particular district and say that you please transfer so much amount for this particular project. So, where the money is going has to be first seen. If it is going to the collectorate's office, there that means it is not having any ATG or 12A or CSR1 registration. If none of these is there, then it will not be a CSR project.
Okay, sir. The better thing is company itself will take the information and go and do its own.
Exactly.
Thank you, sir. The next one is please clarify if the contribution to CSR is to be made even if the company has net profits majorly received from its own write backs of earlier allowances.
Okay. So write backs of allowances. Which allowances actually?
It is like a computation of net profit under 198. There is
okay. So basically, I mean that we have to look at 198 very carefully.
Yeah.
There are a few things which have to be added back and something which has to be deducted.
Yes.
So after all that deduction and addition, whatever is the final figure of 198 profit, that profit figure has to be considered. And from that figure, those exclusions will have to be done. and then you have to calculate the 3 years average.
Okay, sir. Thank you, sir. Then can we get GST credit on amount of payments made for CSR obligations? What are the remedies available if we already created? Like GST input credit, they have claimed, sir, on the payment made to the for the CSR purpose.
Okay, about the GST aspect, I am not fully familiar. So, but if it is part of the, I mean, if while procuring something, let's say the GST is charged by that, I think it should be available, but that is subject to verification. Yeah.
Again, it may even amounts to the CSR surplus again.
Yeah. And I think more than that, whether credit of GST can be taken or not, I think an expert on GST would be able to reply better.
Fine, sir. Then if another question is, if the net profit is less than 5 crores, then do we need to spend CSR? It is, I think you already explained. If the net profit is less than 5 crores, then CSR expenditure needs to be spent in that year. That is the question, sir.
Okay, so here, that means, let us say the turnover is in excess of a particular amount, correct?
Yes,
in excess of 1,000 crores, or net worth is more than 500 crores, and profit is less than 5 crores. And here, and if even if it is less than 5 crores, because of the other condition, it becomes it gets covered, and therefore even if the profit is less than 5 crores, even if it is 2 crores, and the average of the 3 years net profits will have to be calculated, and based on that 2% will have to be
yes, sir. Yes, sir. Perfect, sir. Then whether previous year losses can be set off in calculating the net profit for the CSR purpose?
Yes, we can.
Okay, sir. Then another question has come, sir. It's a like a question of on cricket activity. It says that, somebody asked that, can development of cricket coaching academy is covered as Schedule 7 activities? If it is covered, then whether it will be amounting to the CSR spending?
Okay, see, for sports, there is a very specific provision as to what would be allowed. So if it is falling within that, so I'll just read that particular part again for you. So for the sports activities, it has to be,
because they'll say nationally recognized sports, sir.
Exactly. Yeah. It is, but it is training to promote. It is a training to promote rural sports or nationally recognized sports. So if it is a training expenditure for nationally recognized sports, then yes. Is it something for training?
Yes, sir. Coaching academy is training.
Okay. Coaching thing for nationally recognized sports. Okay. But of course, that particular organization should have ATG, 12A and...
Okay, sir.
Correct.
Then, sir, another question is, initiatives of company towards carbon neutral, will it be considered as CSR activity?
Yes, very much, because this is ensuring environmental sustainability, ecological balance, etc. And therefore, it will get covered under Schedule 7.4.
Then another question is, for CSR committee composition,
okay,
can a persons other than directors be part of this official committee?
No, actually, no. It's only the directors who will be part of the committee.
And they may be coming as invitees.
Yeah, as invitees, they can come. Yes, of course, they can contribute as invitees.
Then ongoing project is approved in the financial year along with the budget for the year. Can this ongoing project be altered or modified in subsequent years?
Yeah, as I mentioned, it can be altered or modified, but it has to be with the recommendation of the audit committee, the CSR committee, and approved by the board. And there has to be a reasonable justification for altering it. If there is a reasonable justification, it can be done.
Fine, sir. Then another question is it mandatory to spend the amount in the first year for if the board has decided contributing ongoing project like commencement you are explaining, sir, on that only it is this question has come.
So his question is that means whether you have done it for multi-year project, but you want to finish it off in 1 year itself.
No. First year they didn't pay anything. That is what
Okay.
they are telling. Yeah.
That is okay. The first year, even if you have not spent anything, so long as you can satisfy the condition that it is commenced, that means a work order has been issued,
Yeah.
or the letter of intent has been issued, and then in that case it is deemed to have commenced. So no expenditure might have been done in that year. Then also it becomes an ongoing project.
Fine, sir. Can a research-related project or program be conducted under the space of Schedule 7 from the specific research-related clauses? Whether this research is allowed as CSR expenditure?
Yeah, research is allowed, but of course it has to be approved by the government and state government, etc. So it has to be not general research. It has to be research as specified in that schedule.
Okay. If the company spends amount on training activities for training or technical training, not for employees, does it amounts to CSR, sir?
Training, is it? Training.
Training for trainees who are not employees, other than outside people.
Okay, it is a direct expenditure by the company, na?
Yes, sir. Yes, sir.
Direct expenditure by the company, and if it is coming within that promotion of education, yes, it can be. Yes, it can get covered.
Yeah, thank you, sir. If the profit exceeds 5 crores at first year of the incorporation, then in which year CSR to be spent?
In the first year, na?
First year itself, they got the more than 5 crores.
Oh, the 5 crores. Then the very next year onwards, say for example, 22-23 is the first year. They have crossed 5 crores. So now 23-24 is the year in which they have to spend the first CSR. So that means the very next year they will have to start spending.
Yeah. Next thing is whether for the board is it sufficient to get the CFO certificate on spending, or it has any more obligations or inspection vigilance has to be done on this?
No, the CFO certificate. I mean, the board can rely on the CFO certificate. But if the CFO in turn wants to get it checked by an independent chartered accountant or anybody else, he can do so. That is voluntarily. But the CFO certificate is a must, and board will bank on the CFO certificate.
Fine, sir. If the company gets approved its annual action plan with CSR committee, is it required to make expenses as per the approved plan in strict and or is there any possibility they can vary?
Yeah. See, there again, the variation is possible, but then the variation has to be done by with the recommendation of the CSR committee, approval of the board, and after reasonable justification, it can be done.
Then can the board of directors delegate their power to approve and spend CSR amount to a managing director?
Yeah, it can be done. But only thing is the whatever is delegated to the managing director will have to ultimately give the details of the expenditure done, which will be noted by the CSR committee as well as by the board, and both will have to approve that. So it is a kind of a ratification by the CSR committee and the board that can be done. But ultimately, either approval or ratification will have to be done.
Fine, sir. Sir, another question. Normally in family-owned private companies are closely held. Only 2 directors will be there. They will be sitting in the board meeting. They will be sitting in any committee's meetings. Is there still mandatory to have CSR committee, though private company not having independent with the same people, or board can directly handle it without having a committee?
Okay. So as I mentioned in my presentation, if the expenditure, the mandate is less than 50 lakhs, they need not constitute a CSR committee. So the board can take up the responsibility, and the board can complete all the obligations. So
if above 50 lakhs, there is no other go. They have to construct.
Beyond 50 lakhs.
So the same people are doing it.
Exactly. Correct. And that is one. And the second point, as per the new clarification which has come, if there is any unspent amount, even if the amount is less than 50 lakhs, you will have to have a CSR committee.
You have to continue to maintain the.
You will have to have a CSR committee. Yes.
But anyway, there are no minimum number of meetings requirement, no, sir.
Yeah, no minimum number.
In a year also is sufficient.
Correct.
Okay, sir. Then the company has not made CSR expenditure for the year as the company was unable to finalize the CSR projects. But still, the company has deposited the amount in separate account. Is it permitted?
Yes, it is permitted, and it has. See now, whether it is for an ongoing project or if there is no project which has been approved.
Yes,
that means in that case it has to be transferred to one of those 6-7 funds.
Yeah, within 8 months only.
Within 6 months.
Within 9 months, 6 months only. Yes.
So by September they will have to transfer it to those prescribed funds.
So without deciding ongoing project, you cannot put it in a separate account.
Correct. Then they cannot. Yes.
Fine, sir. Is it possible for a company engaged in providing services to elderly people for their well-being to whether corporates can provide to that kind of activities?
For elderly people, no?
Yeah, elderly people, yes.
Yeah, elderly people, yes, it is possible. But again, yes, through the implementing agency, who will be will have all those important approvals, registration.
But if the independent agency is not having ATG and all certificates,
then they cannot.
Then it cannot. Sir, one more peculiar thing question has come, whether the company fails, that implementing agency fails to comply with the conditions of ATJ to have continuous ATG. There are certain conditions which are prescribed by income tax department while granting it. If they won't comply or if they fail to file returns under that ATJ, in such case, still the company can continue to give monies to that.
No, once a company comes to know that it has lost the ATG certificate or a 12A certificate, then the company cannot further give that funds to that particular party.
Only thing is, company has to inquire every time whether they are still in.
Every year it has to be. Every year just before payment, we have to ensure that the ATG certificate is still valid.
Better to take declaration from them.
Right.
Sir, if there are any accumulated losses, company is not required to spend any amount on CSR. Still, is it necessary to continue the committee?
Yeah, it is necessary to continue the committee so long as 3 years are not over. But suppose for 3 consecutive years, it is making losses and it is not getting covered, then they can disband the committee. So, which means for 3 consecutive years, if they are not covered, then they can disband the committee.
Yeah. Sir, after Amendment Act in 29/2022, where they have removed that clause of 3 years, if the company is falling below the threshold limits, then they need not conduct the required CSR. So now it is once CSR is attracted, now it is for lifetime company has to keep up maintaining those CSR committees, sir.
No, the 3 years limit is there, no? I mean, the 3 years thing.
In 29/2022, some amendment has come.
Has it come? For that, maybe we can check that. But Ajay, you mean to say it is forever?
That is what the question, sir.
Ajay, but I don't, because as per the rules, if for 3 consecutive years it's not covered, then you need not have a committee.
That was when one originally rules have come in 2021.
Okay. Let me just check.
Okay. Then another question, sir. We can check later that. Then if the company is giving CSR contribution to one NGO who is working in the field of education, health and women empowerment, then at the time of approving CSR annual budget under Schedule 7, we should include the above expenditure also.
You mean if the company has paid to the NGO, correct? Na?
Yeah. Yes, sir.
Yeah.
They have spent some expenditure also, like scouting the NGO and all.
For scouting the NGO.
NGO, yeah, there will be some expenditure.
Only for, you mean administrative expenses?
Administrative, yes, yes.
Yeah, then it can come under administrative overheads.
Okay, sir. And another question is, can a company do voluntary CSR spend in a year and use that to set off next year when it has having an obligation?
Yeah, it can be done because you whatever you spend in excess of your mandate, so that is allowed to be set off. So only thing you have to do it within next 3 years, 3 financial years.
Okay, sir. Then donation by a company to a hospital, will it be considered as direct spending or spending through implementation agency?
A donation to a hospital, no?
Yes, yes.
Donation to a hospital again, whether the hospital has got that ATG, 12A and CSR1, etc.
Okay, that is not given in the
So
question.
the project should be clear. What I mean, just if it is a kind of a donation to the hospital,
Normal commercial hospital, then it is not allowed.
So basically, it has to have all those 3 things.
Yeah, yeah. So unless it is implementing agency which is registered, then only it is allowed.
And of course, the company, if it decides to run the hospital on its own, then it is a direct expenditure.
Okay. CSR funds given to implementing agency, who that ATG, I have asked that question. No. How we can come to know that whether CSR beneficiary is eligible to take CSR? If we spend any money, for example, to any school situated in a village, how should the company confirms that schools fall under category of CSR when it is given through some trust or societies?
Correct. See, one is, of course, first the basic filtering takes place by looking at that ATG, 12A and the CSR1 registration. Assuming that in spite of having those 3, that particular NGO is not doing its obligation, it's not doing its responsibilities, then that will come out with an impact assessment that you may carry out. Or suppose you want to know the outcome of your expenditure, and if it is done through an independent agency, because it can be done voluntarily as well, because one is mandatory part, but even voluntarily you can do it. And suppose from the impact assessment it comes out clear that the amount has been spent correctly, then there is no problem. If the impact assessment says that the money has not been spent properly, etc., then accordingly corrective action can be taken.
Yeah. Another question is any dividend received by a company from another company should be included in CSR net profit?
No, it has to be excluded, provided, of course, that company is covered under section 135 and it is also complying with 135. So if it is also complying with it, then this dividend amount can be excluded.
If a private company falls in CSR provision 21-22 and spends the requisite amount in 22-23, but financial year it is not falling under CSR provision, still it is required that if a company falls under CSR for the 21-22, sir, and spends in 22-23.
Okay.
But for 22-23, there is no obligation.
Okay. So basically 21-22, if it has spent, correct? No, it has spent in 22-23, but obligation is 21-22. So strictly speaking, in 21-22, they should have mentioned that there is an unspent amount and they should have transferred it to that unspent CSR account, and they should have spent it from that account to that. So then they would have discharged their liability under for 21-22. For 22-23, whatever they have spent, And if it can be only set off against the future one, not for the past one.
Okay, sir. Whether CSR committee has the recommending authority that CSR amounting whatever is spending, it is only recommendatory nature or approving authority for CSR to be spent?
No, CSR amount to be spent is a recommendatory nature. It is only recommending the amount to be spent, and the board has to approve that.
Company made CSR expenditure through trust. So trust need to give 10 BE certificate under Income Tax Act.
No.
To the company, yeah.
To the company only the 12A and ATG.
Okay, sir. If the fund utilization certificate is issued by the auditors of trust or implementation agency, is it sufficient proof for proper utilization of funds?
Yeah. If it is a utilization certificate given by that implementing agency, supported by auditor, supported by an auditor, it is still better. So if implementing agency gives, that's fine. But if it is supported by an auditor, it is even better.
Okay, sir. Whether profit for the understanding the CSR applicability is to be taken before tax or after tax, as per 198.
Yeah, this is before tax.
Okay, sir. If the company which has to do CSR expenditure want to create a new section 8 company, which will be a subsidiary of existing company, whether this will be treated as a implementing agency, whether it requires to comply with the conditions of that ATG 12A.
Okay, sir, can you repeat that question?
Company wants to incorporate a section 8 company, sir. New
company. Okay.
And whether if the activity taken up through that company, whether it will be treated as a implementing agency of the company or company directly doing the activity. Point 1.
No, it will be through the implementing agency only.
Then they need to have ATG 12A certificates and all.
Yeah. Only thing, it need not have the 3-year track record. If it is through another section 8 entity or a registered trust or society, and if it is done, it is formed by some other company, then it has to have the 3-year track record of doing similar projects. Otherwise, if you have your own trust, but it will still require all these 3 certificates.
And whether it should be a subsidiary category only, sir, or normal company?
It can be a normal company.
Need not be a subsidiary or wholly owned.
It need not be a subsidiary. It can also be formed or promoted by 4 or 5 group companies together.
And there is one company where the MD himself running a trust.
Okay.
Whether company can spend money of CSR through that trust as an implementing agency?
Yeah, MD is running the trust, correct?
Yes, sir.
Yeah, no, that's fine. That's perfectly fine. I mean,
only ATG and 12A is required.
Yeah. So long as those conditions are met, that's okay. Only for an independent director, that becomes a problem. To be independent, it's a bit of a problem. But for a managing director, it's not a problem. Okay,
sir. Then whether companies are allowed to incur CSR administration overheads expenses up to 5% only or beyond that? Then overall
only up to 5%. Only up to 5%.
Overall expenditure means whether it should be taken for the year or for the project, sir?
For the year.
For the year. Okay. Not for the project.
Not for the project.
CSR done through company's foundation is having CSR 1. Whether it will be treated as implementing agency, as per you said, it is. Yes.
It is.
Then what will be the treatment of receipt of funds received back by the company out of these CSR activities, earmarked for CSR activities?
Yeah, if some refund is received, then that will also have to be spent.
CSR surplus it will amount to.
Not exactly in a way. No, surplus is actually, they mean where you have received some profit or you have
conducted some other activity.
Here what is happening is you are given some amount that NGO is not able to spend that amount, it is refunded.
Okay.
So
Okay.
here that amount has to be plowed back into another CSR activity.
Okay, sir. Who will be appointed as impact assessment agency, and what any criteria or guidelines are required to be framed?
No, impact assessment can be done by any independent agency. So it has to be a third party, no doubt. But there is no specific qualification which has been prescribed for that. So if the big companies may go for some very big organizations like the Big Four and so on, but there can be smaller firms also which can be engaged for doing that. So it's there's no prescribed rule there. Any independent agency is fine.
Okay, sir. Then regarding the impact assessment, if the total project cost is more than 1 crore, but in a company has only agreed contribution of less than 1 crore,
Okay.
whether in such case impact assessment is necessary. Total project cost is 1 crore, sir, but the company has taken up only obligation of like 80%. Like two companies are doing the CSR project. I will say I will spend only up to 80 lakhs. The
Correct.
balance you spend. It's a joint program sort of
Joint
things.
project. Okay. So see the wordings used are where the CSR are having outlays of more than 1 crore or more. So which means basically here they are referring to CSR project outlay of that particular company only. It's not the total outlay
Okay.
of the company.
Okay,
So
sir. Thank you, sir.
company should have spent 1 crore or more.
1 crore.
Of course, at the same time, as I mentioned, voluntarily, if you want to do impact assessment, you can do it.
Yes, sir. Yes, sir.
This is only what is compulsory.
Because the total project cost, when the word is used 1 crore, then this kind of questions will rise.
Correct.
Are there any, if there are any extraordinary expenses or extraordinary income relating to the company, whether this will be taken as part of net profit or under?
So if there is some exceptional income, etc., unless it is specifically provided for exclusion in 198, it will still come under profit.
Okay. So if the company has spent CSR expenditure during FY, however, not mandatory, whether company is required to file CSR2 form.
Where the company is
voluntarily spending the amount.
Okay. No, if it is voluntarily doing, then it is not required.
Not required. Sir, one more question, similar question has come, whether CSR form 2 can be filed belatedly.
Of course, I think with the problems in the systems in MCA, I don't know whether it is possible or not. But I think with the additional fee, etc., it should be possible.
Yeah.
But if it is to be filed, it has to be filed.
Okay. Then Section 8 company having no share capital, only guarantee company, is significant beneficial owner is applicable for such kind of companies. This is, I think, a different question, sir, not on CSR.
Yeah.
This will, I don't think it will come, because when we buy some material and provide to the beneficiaries as a part of CSR project, the amount will include the GST. Can we take the entire amount including GST as CSR expenditure?
Yeah, it is. Yeah.
Yes, sir. Is it mandatory to provide the details of all capital assets which have been given to another implementation agency, CSR purposes, like water purifier, etc.?
Yeah. It has to be disclosed.
Yes.
Any capital asset, but capital asset, if it is in the name of the company, it will have to be definitely disclosed and it has to be transferred. But if it is already transferred to the respective entities, not a problem. Okay.
In case if the company makes donations to the any CSR one filed entity, whether it should take what kind of measures company should take to ensure that amount is spent, whether undertaking or certificate is sufficient?
Yeah, where there is a
You have given money to the trust, sir, and how do you ensure that whether you certificate or declaration or statement of accounts, what is sufficient for you to ensure CSR
if
spend?
the amount is big, amount is large, then you would like to have an independent certificate from a chartered accountant or from any other third party. But otherwise, if the amount is not very huge, and if the trust is trustworthy, then of course you need not have any other declaration. The certificate by the trust alone is good enough.
Yeah. Another one is the company is having a business activity like retail, textile, and intends to supply plastic instead of to eradicate this plastic bags usage, jute bags to the all the users. Whether this kind of spending will amount to CSR under the environmental sustainability.
Yeah, if it is for environmental sustainability, it has to be done. But if it is done in kind, it will not be allowed.
Yeah. So, in case incidental beneficiaries are relating to the companies like suppliers, employees, and all, though it is not meant for them, whether this will be treated as CSR expenditure?
Yeah, if it is only incidental that some of the employees are becoming beneficiaries or some of the suppliers are becoming beneficiaries, if it is only incidental, but while the project is basically for public at large, incidentally some suppliers and others are getting some benefit, then that is okay. That will not be considered as normal course of business.
Yeah, thank you, sir. Then can advertisement for CSR project be considered as project cost? Like you are doing some CSR project and you are advertising.
No, advertisement will not be.
Okay, okay, sir.
Unless, of course, even for the sponsorship, specific sponsorship, etc., they are very specifically mentioned that will not be considered as a CSR expenditure because that is more for marketing and brand building. So that will not be considered as CSR expenditure.
Can the CSR plans, approval of CSR plans and all, can be passed through circular resolution by the board?
If you are referring to annual action plan,
Yes, sir. Annual action plan or spending the amount can be approved.
Annual action plan actually, because a lot of things are there, it will be preferable to do it through the board only. Board has to approve.
Can a state government PSU act can act as an implementing agency if it is registered in CSR1? Because there are certain state governments incorporated companies which are doing NGOs which are doing NGO activity only.
No,
if they have CSR1, whether they can be used as implementing agency?
Yes. Is it an entity created by Act of Parliament and Act of Legislature, or it is just PSU under the Companies Act?
State government means PSU means it is under Companies Act only, sir. But
under the Companies Act. If it is under the Companies Act, then of course it will have to have all those certificates. That
it means either the trust or society or Section 8 company, which is having CSR1 is eligible. Whoever may be formed it.
No, CSR1 as well as ATG and 12A, na?
Yeah, ATG 12A. Whomever formed it, it doesn't matter. Whether government or private.
No, but the three entities which are allowed are only Section 8 companies. Is it a Section 8 company?
Yes, sir. Section 8 is there.
If it is a Section 8 company, yeah. If it is a Section 8 company with 12A registration, ATG certificate and CSR1 registration, it's fine.
So, in rural development, any activities are specific in nature, or any activities which are directly, indirectly covering the benefits of this Schedule 7 are taken as rural development?
Yeah, actual rural development, suppose you want to make some, let's say some self-help groups or some, you want to construct some roads there or something like that. It's a rural development project. It can be done.
Yeah, okay. Sir, we have taken majority of the questions, sir. Time is already nearly 4:30. If you have time, balance any questions, sir, I will take up, sir.
I think maybe some of the other questions we can take it up separately. Now, what is the correct time? It's
4:20, 5:20, sir. 5:20.
I think so. We have already exceeded the time.
Exceeded 20 minutes than
20
the
minutes.
allocated
I think,
time.
Maybe we will have to wind up. We will have to wind up.
That's why I just want to take your
Yeah.
permission, sir, consent.
I think we'll have to wind up. Yes. Yeah.
Friends, thank you very much for being with us for more than nearly 2.5 hours. Might be some of the questions we could not able to take up because of the time constraint. Still, I have tried to take up a majority of the questions. If any questions are there, I think sir is available all time for our purposes. Your mail ID can be given for to the members. If any questions are there, they can directly post to you, sir, if you permit. If you are
I think Pooja has got my email ID. Pooja and Deepaji, so you can take it from them also. And
thank you very much all for patiently with us. Definitely, we will be looking forward for the next programs. I would like to just announce that there are next 2 weeks also we have planned for. The next week it will be on 19th July by Mr. S. Sudhakar sir, who is worked earlier for Reliance Industries on RPTs, and on 26th July 2023 by Ravi Verma sir on SEBI LODR. So please have continuous participation for all these webinars, which will be enlightening your knowledge. And thank you very much, sir, once again for having consented and spending your valuable time here. We will be connecting back to you for some other purposes, sir.
Yes, most welcome. Thank you
so much, sir. Thank you, everybody. Thank you, one and all.